$7 trillion. That's how much Vanguard are said to currently have under management. Vanguard, maybe you'll have heard of them before or been interested or have even invested in one of their low-cost, easy-to-use ETF funds or index funds. That's because they're one of the world's largest asset management companies. Vanguard's clients' wealth increased by 930 billion over the course of 2020 from this article in ft.com. So it's good reason to understand that Vanguard is of course very, very popular. And with that being said, I am a big fan of Vanguard. I invest in them personally myself. But if you were anything like me when I first got started, I really wanted to know which ones are good ETFs, especially for global diversification as well, so we have less risk in our portfolio. So guys, if you're new here, my name's Campbell and welcome to Maximise Your Money. In this channel, we talk about how to make, manage and multiply your money. Now, while I'm not a financial advisor and nothing in this video is financial advice, I thought I'd share with you my top funds and ETFs for global diversification. So first things first, we'll just quickly explain what global diversification is. The idea is that rather than just investing in one place, for example, America, then you would also invest in different geographical regions of the world. And that could be good because if something does happen to America and you have access to other areas of the world, then your portfolio won't be as affected as much because you've got the other geographical regions to make up for it. So that's exactly why the concept of global diversification is quite popular with the investing world. And some of the things that could probably cause like a stock market in a major region to go down could be, for example, if there was like a natural disaster in that company, like a super volcano erupted or an earthquake that just completely changed things. Maybe it could be, on the other hand, a political scandal, or they're having like civil unrest in their country. All of these things can happen to a given region at any given time. We don't know exactly when those moments are going to happen. So again, it's just something that we're using as a precaution to try and minimize that risk just that bit further. So let's go ahead and check out these Vanguard funds. And obviously, because we're here in the UK, I just thought, why not? Let's go ahead and start with the FTSE UK markets. So the FTSE UK All Share Index Unit Trust Accumulation is our very first one that we're going to be looking at. So we can see here that the actual fund is made up of 596 stocks as of the 31st of December 2020. Personally, I like when there are lots of different stocks that are a part of the actual fund itself, because just like that diversification factor, if a couple of stocks do really, really badly for whatever reason, then of course all the other stocks in the fund can actually make up for it by, having great results. And this is the whole purpose of these funds. That's going to give us a lot of opportunity to have interest in a lot of British companies, so we can be happy with the fact that we're pretty much covering the UK market for our global diversification in that sector. Looking at the performance of this fund, if we were to invested £10,000 in 2009, today that would be worth approximately £19,430, which is not bad. It did go all the way up to 21,000, but of course now it's not bad at all because things are actually rebounding quite nicely at the moment. So anyway, the main point is this has got a really good proven track record of over 10 years, and that is something that is really, really good to see. Another element that I really love about Vanguard funds is that actually they spread the portfolio into different sectors of the economy. So for example, we can see that there's like 23% of the fund is made out of financial services. We can see that 16.6% was out of consumer staples. We've got 9% in healthcare. So why that's really, really good is because, for example, if there was a part of this fund that was in energy, let's say oil, and the price of oil went down loads, then unfortunately you might be able to have to accept losses on that, for example. But at the same time, if the fund has different other areas of the economy, so not just energy, but things like transport, you've also got financials, consumer staples, as we're seeing here, it just allows us to have that more spreaded exposure as well. So nice mix of diversity in this UK All Share Index. Now, next one on the list is the US Equity Index Fund Accumulation. And obviously this covers the US markets, so that's just to bear that in mind. And by the way, if you're wondering what accumulation means, all this basically is that when the companies actually produce dividends, those dividends, rather than being paid out to us, we say we're not going to take those dividends. We'd rather just keep them invested and put back to buy more stocks so that actually the compound growth of the account can happen much, much faster. I like that because I really am in this personally for long-term growth rather than just being able to receive monthly paychecks from my investments at this point. Of course, US is a very, very big sector of the world economy. So there is 3,535 stocks within this fund, which is great. You know, a big spread of US companies in there, which is fantastic. We can see that if we invested £10,000 in May of 2009, then that would actually be today £54,244, which is absolutely incredible. It's got a great proven track record, and one thing that we have seen with America is that, you know, their actual stock market index has just done consistently well over the past many decades. So there we go, we can see some lovely, lovely results there. Some of the big companies that lay within this fund include Apple, that holds 5.41% of the fund, Microsoft, Amazon, Facebook, Tesla, Alphabet, which are essentially the parent company of Google, Berkshire Hathaway. So these are huge companies that just by having this fund, you actually are invested in as well. So a really, really nice way to gain a lot of exposure to the world economy. You know, Amazon, Facebook, Tesla, these things are having global impacts, and that also spreads diversification as well. The point just to kind of mention out here is that this also has really nice low fees of only 0.1%, which is absolutely fantastic in my books. So that's something that actually over the long term can save you a lot of money, because if you are having to pay high fees, then those fees are being taken out of your actual money to pay other people, which is why I like these passive funds. If you found this content useful so far, go ahead, do me a favor, hit the subscribe button so you can see more videos that help with managing and multiplying your money. This next one, we've got the FTSE developed Europe excluding the UK markets. This is going to give us great diversification, great access to the European markets excluding the United Kingdom. And that's great because of obviously Brexit's happened, so there's different things that are going to be happening from here forward for those regions. And also we can see here that there's 475 stocks, which is great. You know, there's a nice distribution. Over the long term, we've also seen a fantastic track record. 10,000 in May 2009 would now be worth 29,239. This might not be as much as America's, however, it's nice to be able to still have that global diversification. Just because America's doing fantastic or has done fantastic for the last, you know, decade or so, doesn't mean in the future these other areas like Europe, the UK, and the next one that we'll go into won't do as well. And our fourth and final one is Pacific markets excluding Japan, and they have 130 stocks available to them. If you would have invested £10,000 in May 2009, today that would be worth £29,654. And we can see that the actual places involved in this fund are Australia, Hong Kong, Singapore, New Zealand. That gives us a nice weighting. There is a big focus on Australia, and then also quite a bit on, you know, Hong Kong as well. They do make up most of this, but it's nice to be able to have access to that side of the world as well. These four funds cover pretty much all four corners of the earth, and as you can see, have a really nice track record. And by investing in these funds, it's a really actual easy way to get involved with owning a portion of the world, because now you have an interest in literally thousands of different companies. It's probably key to say here that this style of global diversification is not 100% foolproof. If we look, for example, at what happened with the situation over the last year, it was a global effect. All the markets of the world pretty much had a period of going down in March of 2020. So that's just to bear in mind with this. It's not 100% foolproof, but to be fair, there isn't any ever guarantees in the world of investing. If you loved what you saw in this video, then definitely go ahead, hit that like button so you can see more videos like this that are going to help you understand, of course, the world of investing, concepts in investing, and most importantly, what that means for you is that you're going to be able to better manage and multiply your money. So I'm going to continue sharing everything that I have with you guys. And if you love this, there's two videos that I recommend that you check out on the screen here. So if you like this video, thumbs up, subscribe, turn on notifications so you don't miss anything like this, and I'll see you in one of those videos.